Hello, today is Friday, July 3rd, 2026. Here is your daily signal. According to Bloomberg, the Reserve Bank of India is implementing new bank guarantee regulations starting July 1, requiring trading firms in the capital markets to fully back these guarantees with collateral, half of which must be in cash. Central banks in emerging economies, such as the RBI, play a crucial role in safeguarding financial stability and shaping capital market dynamics. Over the past year, persistent rate holds and hawkish policy from the U.S. Federal Reserve have sent ripples through global financial markets, influencing investor sentiment and capital flows across emerging economies. Notably, the Federal Reserve maintained interest rates at current levels on July 2, 2026, reinforcing a bullish outlook for the U.S. dollar and widening credit spreads in developing markets, as highlighted by J.P. Morgan Research. U.S. monetary policy changes in the 2022-23 cycle had notable spillover effects on emerging market capital flows and economic conditions, as detailed in the Federal Reserve's July Fed's note. In the near term, rising funding costs and tighter liquidity could dampen new capital issuance and challenge refinancing for corporates. Elevated global rates may prompt increased capital outflows, heightened currency volatility, and pressure on sovereign bonds across emerging markets. Medium-term regulatory adjustments such as India's stricter bank guarantee norms are expected to bolster bank resilience but might curb credit growth and investment appetite. Persistent divergence in monetary policy between developed and emerging markets could force emerging market central banks to resort to unconventional tools or coordinated interventions. Fortune reports that the Bank for International Settlements has warned of a massive $1 trillion AI investment boom fueling a potential market bubble, drawing explicit parallels to past speculative manias like the dot-com crash. In 2024, global AI infrastructure spending surged, with unprecedented investment flows into data centers and chip manufacturing. Major players including Nvidia, Microsoft, and Alphabet are driving technology valuations and wider market indices. The BIS, acting as a watchdog for global financial stability, flagged risks associated with the rapid investment in emerging AI technologies. According to Reuters, AI-related stocks have accounted for 68% of recent S&P 500 gains, illustrating the sector's dominance. Bloomberg notes that ongoing capital inflows remain concentrated among a handful of tech giants. In the near term, increased volatility in tech-heavy indices could pose risks for investors big and small. Aggressive infrastructure spending may accelerate innovation but also intensify imbalances in debt and equity markets, raising short-term financial risks. Should a systemic correction occur, companies and funds exposed to AI could face broader financial stability issues. Medium-term regulatory responses may include stricter capital allocation and disclosure rules to curb excessive speculation and prevent wider fallout. New Scientist reports that the U.S. government is accelerating its quantum computing strategy with the aim of having a usable machine before 2028. Through the National Quantum Initiative Act, launched in December 2018, the government is prioritizing advances in hardware, scalable architectures, and error-corrected qubits. American leadership in quantum technologies is being supported by intensified funding and partnerships, paving the way for breakthroughs in cryptography, materials science, and high-speed calculations. The Department of Energy, National Science Foundation, and NIST are working alongside major quantum companies like IBM, Google, Honeywell, and IonQ, as well as top academic institutions including MIT, Stanford, and the University of Chicago. Rapid acceleration could open the door to U.S. quantum breakthroughs for secure communications and cryptography by 2028. Enhanced public-private cooperation is expected to stimulate multi-billion-dollar investments in quantum research and infrastructure. Should technical milestones be achieved, applications in drug discovery, financial modeling, and defense could be realized in the coming years. However, the emergence of functional quantum computers may demand new cybersecurity standards, as quantum capabilities threaten current encryption methods. Now, onto the markets. International stocks were mixed today, with Italy up about 2.5%, while China large cap slipped nearly 0.2%, and Germany showed both modest gains and losses among its ETFs. France and United Kingdom each advanced over 2%, with France's EWQ and UK's EWU leading the uptick. Commodities saw gold climb over 2%, closing at $378. Platinum surged nearly 3%, while agriculture edged lower and oil was virtually unchanged. Within favorites, Adobe rose over 4% alongside Apple's nearly 5% gain, while AMD and Nvidia both retreated, losing over 1% and nearly 1.4% respectively. Microsoft added about 1.6%, and Amazon eked out a slight gain, but ARM dropped 6.6%, making it the steepest single-day decline in the favorites. Among sectors, healthcare jumped 2.6%, finance grew by 1.5%, and agriculture gained more than 2%, while semiconductors fell more than 5.5% and clean energy lost nearly 5%. That's it for today. You can find more news and details on our website. Goodbye.